And normally we should be good to go. Fiona, if you can hear me, you say money affects our social well being.
Yes, it does.
And that's why we are here to discuss money. You know, money touches on a lot of things. It starts with the way you receive the money, you spend it, and then you decide to say, I want to be a businessman. And then kidogo kidogo, you realize, hiya, you don't just want to do business. There's somebody else who has to make money for your money. And that man or that gentleman, should I say, I think it's a gentleman. Men take a lot of money from other men. It becomes the tax man. So Fiona,
Definitely a man.
it's definitely a man. I know ladies don't take men money, so your story
No,
atuna
we are
nayo.
innocent.
They are very
Yeah.
innocent. They are very innocent. So
Yes.
today's conversation, it's all about the issue of tax compliance. And when I think about this, I'm looking at the common reporting standard. Maybe as you introduce yourself, I will also want for you to really give us a very short definition of what that term it's all about, Fiona.
All right. Thank you, Eli. My name is Fiona Witaba. I am a certified public accountant of the Republic of Kenya. I'm also a tax expert, and my hobby is assisting small and medium businesses to understand their taxes, individuals to break down tax concepts that seem like they are jargon or they are heavy, and make it simple so that they are able to implement it in their businesses, save on their taxes, be compliant with their operations, and overall improve their business financial health. To answer your question, what is CRS, right? Common reporting standards. So these are global standards or global agreements that several countries get into to enable them to pass between one another financial and non-financial information so that they're able to help one another curb on tax evasion. So, like
Mm,
for example, a country like Spain could disclose information about a Kenyan who is living in Spain and their financial situation over there to ensure that whatever income is there and is untaxed has been taxed in their home country. So they're just global reporting standards that have been accepted as agreements between various countries
yeah.
so that they assist one another, especially the tax authorities in each of those countries, to curb tax evasion through models of transparency and trust.
All right. So in this conversation, Fiona, we will use the short form CRS, and I hope now all of you who are listening, you can be able to understand when we say CRS. That is the Common Reporting Standard. There's an S at the end of it. Looks like the editor was also being very economic with that word. Now, you've talked about different, countries collaborating so that there's no tax evasion, among others. One of the main key questions that arises, especially for a Kenyan diaspora like myself, probably I see Shiko is here joining us from Saudi. I see Mso is joining us from the UK, among others who are saying, I want to start a business and run my business in my country. I am very Kenyan. I want to build home. But then when that comes for filing of taxes, they don't even think about declaring this income. Now, do I have obligations as a Kenyan diaspora to declare my income in my resident country and in my home country? And what are these taxes and incomes I'm supposed to declare, Fiona?
All right. So for a diasporian or someone who lives in diaspora,
Mm,
taxes don't cease to exist because you left Kenya. Like you've said, there's someone who's out there and they could be interested in taking the wealth that they are creating abroad and investing it back at home. And in that way, that investment now begins to generate some profit, generate some income, which is profit. So that profit is what is taxed because according to our Income Tax Act, income that is derived or accrued in Kenya is taxable income. So
mm.
whether you are living in Kenya or you're living outside Kenya, so long as you have an economic activity within the borders of Kenya that is generating some sort of profit, then that profit is taxable. And because I don't want to assume, when I say profit, I mean that once you've generated your sales for your business, you deducted your expenses, because for every business that generates sales, there are some costs that you had to incur because you need to spend money to make money at some point. So whatever is left is what we are defining as profit. So this profit is what is taxed. So long as it's within the borders of Kenya, it's taxed at a certain rate. If you're investing as an individual, which means that you have not registered officially a limited company or a group company or a holding company. If you're investing as an individual, then the tax rate runs from 10% to 35%. That makes you a sole proprietor.
Yeah.
If you have registered a limited company, then the tax rate is at 30% on your profit, which is a flat rate, whether you are in Kenya or outside Kenya. So that needs to be very clear that just because you are outside Kenya and you have some investments that are running in Kenya that are generating profit,
Yeah.
that does not exempt you from the taxation model in Kenya.
All right. You know, I love what you're talking about. And at one point, there was a very serious campaign term. I don't know if it's still being used, tulipe ushuru tujitegeme. And I'm thinking, I am already living in the UK, for example. Okay, this is just a country. I don't know what agreements they have or what other countries have agreements on the, how they're gonna do their common reporting standards. What percentage is considered enough to be paid at my home country and in the country of my residence? Do we have different percentages that are incurred to determine the tax obligation?
Okay, so that is a complex question, but I'll try and simplify it. For every jurisdiction, and by jurisdiction I mean country governed by law.
Yeah.
So for every country that has its own law, it has its own tax laws as well. So when you are a resident of one country, you will follow the tax laws that are applicable there. And when you move to another country, you follow the tax laws that are applicable there. So what then happens when you find yourself in a situation whereby you are generating income and all this income has already been taxed in one country? Does this mean that the same income will be taxed twice? So will it be taxed in the country you're residing in? Let's say you live in US,
Yeah.
so you've paid your taxes in the US. So will this same income again, when you remit it back home, be taxed in Kenya once it hits your bank account? So the simple answer to that is no. No, because countries have what we call double taxation agreements.
Yeah.
A double taxation agreement is an understanding or an agreement that two countries or more countries get into to ensure that the same income is not taxed twice. So it's just to protect the taxpayer such that they don't pay taxes twice on the same income. And how DTAs, which is the short form of double taxation agreement, applies is that once you have been taxed on this income, then that income is compared to how much taxes would have been levied on it here. And if there is an excess, so let's say let's take practical examples.
Yeah.
Let's say somewhere in the country you're residing in, you've paid taxes worth 40%. And then in Kenya, maybe your tax is 30%. So the difference there is that you've overpaid taxes by 10% in Kenya. So that means that when it comes to Kenya, that income will not be taxed here, grounding it on the double taxation agreement between Kenya and your country. So what if we flip this, and now it is that in your country you've paid taxes of 20%, but then that income, when it is now remitted back to Kenya, the tax rate here is now 30%.
Yeah.
So you see, in this, there's a shortfall of 10% that needs to be paid on that income. And in that case, that is exactly what will happen. So this income will be taxed at 20% in your resident country and 10% in Kenya, to make sure that in Kenya you've paid your full tax rate of 10%. So double taxation agreements apply either as an exemption or as a tax credit.
Now, I love when you talk about credits and exemptions. But the problem is, I'm thinking, I'm paying slightly 45% from my income. That being the tax rate that is applied for money or income made in my country of residence. I am also paying slightly 30% in Kenya. Um, which tax takes precedence in terms of mgani atachukuliwa pesa mingi, mgani atachukuliwa pesa kidogo? And I know you've put it that way in terms of the credits and the exemptions, but I'm still trying to think around, should I declare that I earned money in Kenya or not? Does it make a difference? Because people are always afraid of declaring their extra source of income. Does the taxman get, with all this common reporting standard, does it expose you to more scrutiny, or should you just say siku yenye itanipata inipate?
I think, look, Uyani, sometimes we try to be so smart until we outdo ourselves and end up being not so smart. These things are very straightforward. I know tax is a big word, but it's actually very straightforward. In your example, where you're asking me, there's 45% in the country where you're in, and then there's 30% in Kenya. So obviously, you'd want to go for the 30% because it's lower. I mean, that's what everyone wants, to save money. But then, where are you deriving the income from? So, is this income that is being taxed being derived from the country that you're in, or is this being derived from Kenya? So that's the starting point,
Yeah.
because there are laws that govern all these questions that you are asking. So now that let's say you've derived it from the country that you're working, because you're living because you're working there as a resident.
Yeah.
So after it's taxed at 45%, then there's no commensurate or additional tax that will be levied on it here in Kenya, because now you've already surpassed. But if it was money that you have accrued or derived from Kenya, from the Kenyan economy, then there's no way that money will be taxed at the 45% rate that is operational in the country that you're in. So that will be taxed at 30% if it's a limited company, because those are the laws that govern this jurisdiction. So it's a matter of where is this income accrued and derived from.
Derived
It's
from.
also a matter of who are you a tax resident of. Tax residency is defined by where is the physical person located.
Okay.
Where is your actual body found? In which country are you in? So if you are in a country like Germany, then you're not a tax resident of Kenya. You're a tax resident of that other country. But
Yep.
also there's factors like how many days do you spend in Kenya? Because a tax resident of Kenya is defined as someone who has spent 183 days or more in a year in Kenya. That converts to around 6 months. So if you've spent
Wait,
six
wait.
months
You're
or
too fast
more,
for me. Twende pole pole. Twende pole pole.
okay, sorry.
I am at 183. I want to calculate so that I know if I'm still on the safe margin, all right? So,
Okay, yes.
is it you are there for a period, let's say roughly 6 months consecutively, or does it count in betweens? For example, I travel 2 months, I'm in Kenya, travel for another 1 month, there's a break in between. Please specify that.
So first of all, it's over 183 days. So you must have spent 6 months and 1 day and above for you to have been a tax resident of Kenya that year. And in the counting of the 6 months, or rather in the counting of the 183 days, they don't have to follow one another consecutively. So long as you can prove, and proving is evidence, you can show the flight dates and the activities perhaps that you were here partaking. You can prove that you are here for 183 days, whether it was 10 days in January, and then another 3 months around Easter, and then another 2 months, September and October. It doesn't matter, so long as the cumulative is amounting to 183 days and above, or an average of 121 days each year for 3 consecutive years. So those are the three factors that will be considered. Those are the two factors that will be considered to determine residency in Kenya.
Yeah. All right, now you guys know that. So if you have a question for our guest, this is the time to shoot in the question because she wants to deal these things na tumalizane. Sawa sawa. So we are discussing about the common reporting standards and what it means for you, especially if you are a resident in Kenya or if you're Kenyan diaspora and specifically the Kenyan diasporas. This is a topic you want to listen in very, very carefully. And Fiona, you've just explained some of those scenarios, including the what will qualify you as how you call it, a tax resident in those in I mean according to our laws and how it's determined. So the 180 plus 1 day, depending, or 183 days or more plus. That is something that determines where this individual, Eli or Fiona, gets to be taxed. Now, I want to go back to something that probably might not be linked, but I think as a Kenyan diaspora, I've experienced it a lot. A lot of Kenyan diasporas here have taken what we'll call, subscribe to bonds. They have shares. Some of them equally do have what ordinarily will be called life investment policies. Before they left Nairobi, somebody came to them, oh, in 10 years you can earn this and that much money. Where I'm headed with this is some of these investments are subject to tax reliefs, specifically for, investment policies. But then they never receive the tax relief certificates. And even if they were to receive, are they in any way entitled to claim these reliefs? And I'm speaking as one of the victims. Fiona.
Okay, would you mind sharing your experience?
My experience is in the last 9 years of my investment, I only noticed the other day it's not an investment. I'm supposed to get annually a tax relief form because I'm paying tax on that policy. All right? But then, none of these years, this company that I've saved with has ever presented me with a tax release certificate of form. Lakini wanakuwaga wajanja because anytime I'm in town, huwa tunapitana na agent anaenda huku, mimi naenda huku. So I'm asking, niko na kesi ama sina kesi ya pesa yangu?
Okay. So the investments that you are mentioning, Eli, are mostly passive investments, like investing in bonds, bills, treasury bills, money market funds, maybe special funds, passive income put into an investment engine that is generating interest. So this investment right here, what is generated is the interest. Interest is generated.
Yeah.
There's a withholding tax that is levied at source before you withdraw your earnings from your investment.
Yeah.
So what is taxed is not the entire investment. Let's say you put in 20 million Kenyan shillings, 20 million Kenyan shillings. So let's say that 20 million Kenyan shillings generate 0.5 million for you as interest, which is a very good return. So with this 2.5, that is where the taxes will be levied. And the tax is levied at, so at the point at which you're withdrawing your funds plus your interest, then that interest is taxed and a withholding tax applied of 15% or whichever percent applies. Most of the times it's 15%. So when this withholding tax is applied, the institution, the financial institution, whether it's an insurance, an insurance company, a SACCO, an investment bank, they're supposed to issue you with a withholding tax certificate. And most of the times for this passive investment, the taxes levied are a final tax. So you're required to then again go to your annual return and start declaring that I have 0.5 million, and if you're investing as an individual. So once you have gotten your withholding tax certificate, that will be your proof that you've paid taxes on the income as interest that you have earned from your investment. So it is your right as an investor to query whether your investment engine or platform provider has issued you with a withholding tax certificate at the end of your investment journey, because that is your proof to show that you have paid, that your taxes have been paid on your investment and they've been remitted to KRA under your KRA PIN. Because you find that some of these investment channels actually don't remit the tax that they deduct from you, which is illegal. And I'm not sure what happened in your case, but I'm hoping that was not the case, because then that would mean that this is tax fraud, because they are supposed to have remitted this money to KRA on your behalf as an investor, so that you have now fully paid your taxes on your passive investment.
All right. I will go and check with my agent and find out what has been happening. And if you also have the same case, please reach out so that we can be able to see if someone else is playing with our money, because money is something you don't want to play with, especially if you know I'm your uncle. Anyway, on a serious note though, I have a question here from Madame Moisel, who asks, what about money earned from betting? I don't know if it's within the range of conversation in terms of taxation and all that. At what point does it get taxed? Is it during the, I think, yeah, you can explain. At what
Okay,
point
hi,
does it get taxed?
Mademoiselle.
Yeah.
Thank you for your question. For the betting earnings, they are taxed at a withholding tax of 20% at source. So if you won a million Kenyan shillings from your betting expedition, then 20% of that would be withheld at source and remitted to KRA as withholding taxes, and what you would actually receive in your bank account would be minus the 20%. So what you'd receive would be 800,000, and a withholding tax certificate of a gross submission of withholding tax worth 200,000.
All right. Oh, hii pesa, mambo ya pesa ni mingi sana. You know, Fiona, you are laughing, but
And
you know, some of us, when we hear tax, we want to disappear into some thin holes or very wide holes. And the question now becomes, why is it important for someone to actually declare their taxes or their incomes? To whose benefit?
you know the way, I don't know if you're a Christian, but I'll start by saying, first of all, the Bible says, give to Caesar what belongs to Caesar.
You really had to remind me about Jesus. That's why he was crucified. But anyway, on a serious note, though. Yes.
So Caesar needs to take his cut, and Caesar in our situation in Kenya, that's KRA. So why should you declare your taxes when you're an employed person, mwajiriwa? You should declare your taxes because you are agreeing. Because you see, there are those employers that will deduct taxes from your money and
Yeah.
they will not remit to KRA, but they will deduct from you. So when you declare your taxes, you are agreeing to say, yes, I was supposed to be paid this, they paid me this, they remitted this. So you're agreeing that what you received was this one that they are saying they paid you.
Yeah.
And you find that, especially for employees, there was a time in Kenya when, if you read the history of taxes, when there was a time employed people were not declaring their returns and filing their returns, declaring their taxes. And many employers saw that as an opportunity to not be remitting, because no employee will come to give a confirmation of, yes, I was deducted this amount and this is what I was actually paid. So there was a lot of taxes that the government was losing out on. And as a result of that, you find that employees as well have to declare their earnings and file their returns as a sort of rubber proofing, and saying that, yes, I was the correct thing happened to my finances tax wise. But then for other people, taxes is like the rent that you pay to live in a country or to be a resident of a certain country. I know it sounds harsh, but it's
It is
been there
very
since
harsh. It is
is
very
it's
harsh,
been there even
Fiona.
in the days of David. Even King David used to collect taxes with all his glory. So taxes is sort of like it's rules that have been there since the beginning of time. They are needed to run the infrastructure and to lay out the development policies and whatnot.
Yeah.
So taxes is needed for that. Of course, there's other complex situations of scandals here and there that surround our taxes, which is what makes the Kenyan tax environment a very volatile and sensitive place, because people don't trust the tax authorities. They don't trust their leadership to handle their taxes with integrity, which is why we're even here, Lukuyani,
Mm.
asking one another questions about tax, because there's a lot of distrust between the taxpayer and the
Yeah.
tax collector. So if there was no distrust, then these questions would be much less, because you'd see the impact in your own life and in the lives of your family and your children and your education system and your medical setup in your country and all that.
Yeah.
So you need to pay taxes because it's the law. It's the law because it's always been the law. I don't know how to explain it. It's always just been there. It's rent. Pay your rent.
This rent, you know, this rent is very difficult. But
Yeah.
again, I understand, and that's something that a lot of us might not really, get. Why should I pay to live in this country? But I think also governments do not function from, some philanthropy. Somebody has to finance that engine, and that is you and I, through the some money that is collected to create public good for the rest of us. And I think the biggest, sorry about that, the biggest problem is some people always assume or feel that there is a shorter end of stick that comes their way after they pay taxes, and whereas others are benefiting from this tax. And that's why it's a big conversation amongst us who are hardworking and very diligent in paying and submitting our taxes. But that's on the side, Fiona. I'm here, I'm sending money to my Kenyan account, okay? And then suddenly I'm told kuna story kwa kijiji, taxman amesema pesa yote yenye atapata kwa akaunti yako inapata taxation. What is the truth about this story? Is there any?
Do we tackle it from the diasporian or from the Kenyan in Kenya?
Wote tu wawili. Kenyans
Wote
in Kenya
wawili.
wanaongeleanga mpesa sana, because hawa wanakuanga nitumie, niko kwa line. Unajua niko kwa line ya mpesa. Alafu mimi Mkenya wangu, because I'm planning my 10 anniversary of having left Kenya, I've been saving for 2 years, natuma pesa yangu, and then somebody is whispering, hey, by the way, KRA is coming for your money in your account. Run.
Yeah, it's very unsettling. It's very unsettling, especially when you're not even in that country where your bank account and your life savings are.
Yeah.
I do empathize with that. But the first question I'll ask such a person
Yeah.
watching who is in that situation is, the money that you've been remitting home from your resident country, has it been taxed over there?
Clearly it's from my
And
salary.
yes, so it's been taxed already
Yes.
through the tax jurisdictions and laws that apply in that jurisdiction.
Yeah.
So for me, I'd tell such a person to relax. No one is coming after their millions in their bank accounts stacked over years. They have proof that this money has actually been taxed. Further, there's a double taxation agreement
Yeah.
that is in play with most countries that has protected their income from being taxed twice. So such a person has nothing to worry about. The person who has something to worry about is the one whose revenue or whose funds that have been remitted back in the Kenyan bank account have not been taxed anywhere. So that is the person who has some worrying to do. And that is why you find that most people prefer to stash their money in what we call tax havens,
Yeah.
whereby these countries are not in common reporting standard agreements. There are countries that are not in the CRSs. So some people prefer to stash their money in that other jurisdiction. But at some point, you may need to wire the funds back to your own country. So it's not a sustainable solution, unless you have investments in that other country where you're stashing your money in.
So,
Yes. So
Fiona,
so long as it's been taxed, it won't be taxed again. If it's not been taxed, then at some point, if you are the one who has been caught up with, you
yeah.
may have some questions to answer.
So, in short, what you're talking about is record keeping, and that
Yes.
actually applies across from your private banking system to a business owner. And I know some people here are also business owners. Probably they are thinking, am I in any way doing something right or wrong? Since you are a tax consultant and a business growth advocate, I would like for you to touch something small when it comes to this small medium enterprises and their record keeping and this tax thing. Kuna mali inaweza waletea shida kama, yani nimenunua njugu ya shilingi 5, I need to declare that, like, Fiona, what are you telling me?
Hiyo njugu iko na unaitumia ku make peanut butter, ama what are you using the njugu
We're
for? Are
just
you
trying to
selling
live,
peanut butter?
just trying to live a good life. Right now we are not eating meat
Okay.
because you are in Lent. But anyway,
Okay.
from the business money, I go buy njugu kaanga ya 5 bob. How do I make this money look like sijajiibia?
Okay. So let's talk about my particular people, SMEs. Those are the ones we are talking about. I interact with them every day.
Yeah.
I understand their struggles in depth. And when it comes to record keeping, this is the most important thing you will ever do in business. And I know most of small businesses are run ordinarily, they are run kienyeji. So long as me in the beginning I had 100,000, it has grown to 200,000, I'm happy. I invested the 200,000, it has grown to 400,000, I am happy. Like there's no tracking of how did we get to the 400,000, and that is the process of record keeping. So we start with this 100,000. Where did it come from? Was it an initial capital investment? That should be there in your CR12 as what you had when you were starting your business. And then now we come to the inventory that you bought. Is there purchase documents to prove that you actually paid certain amounts? Are these purchase documents ETIMS verified and validated to make them actual deductibilities in the light of taxes? Then that's the second step. Then you go to making a sale. Have you lodged your sale in the compliant way of passing it through ETIMS or an ETR machine that is TIMS enabled? That is the third part of record keeping. And then you have those challenges of there are those transactions that you cannot validate using an ETIMS receipt. And you realize that if you go to a Boda guy and you use a Boda every day and you're always spending money going in between maybe some business operations, how will this Boda guy give you an ETIMS receipt for the payment that you're making to them?
Yeah.
Those are questions that are valid. There are questions that are being tackled even at KRA. ETIMS is a system that is only 2 years old, 2 years old active in the market. Of course, it was developed for a bit longer than that, but it's still being developed, still being enhanced to fit into this particular economy. What I feel as an individual, my opinion is that the rollout for ETIMS may have happened too fast and too soon.
Yeah.
It would have been much better if it would have been put out in phases, such that maybe the first 7 years it's made to be voluntary, and then the next 7 years maybe they then just tell only the large corporations to follow ETIMS compulsorily, and then maybe now on the third phase of the 7 years they start making it compulsory for businesses selling above a turnover of about a certain amount, like 25 million a year. And then now in the fourth quarter of the 7 years, sorry, in the fourth, seventh year band, then
Yeah.
they can make it compulsory for everyone. You see, in that way, everyone has grown up knowing there's something called ETIMS. It's used to govern businesses, invoicing mechanism, and it's the way of KRA enhancing transparency in tax collection.
Yeah.
So that would make it to be up for the uptake to be even enmeshed in our lifestyles. The border guy would have ETIMS in their phone. The M-Pesa transaction would be an ETIMS validated M-Pesa transaction in your phone. So that would make things will give things time to catch up. But e-teams has been brought forth so fast, but this is just my personal opinion.
Yeah.
A slower phase out would have ensured more finalistic results, especially with the SMEs. And even the large corporations are struggling. I think everyone is struggling with e-teams because the buy-in was not there as a collective, and therefore this is where we find ourselves. But it is a very important part of our record keeping. Small businesses, medium businesses, large businesses will get into a lot of trouble, especially this year and moving forward, if their transactions, whether sales or expenses, are not validated on e-teams. Then we have the problem of now cash coming into the picture, because people are saying, if I can't prove my transaction, my expenses, I want also my sales to be out of any trail. So then you have situations like Isili, whereby
Yeah.
anytime you go to pay for anything, you're told to withdraw your money. And those are now the challenges that are born from challenges of a system that wasn't rolled out in the correct way yet. The law is still not going to budge.
And that makes it difficult for compliance to happen, right?
Yes, yes.
S-
It makes
s-
it a jungle where everyone is fighting.
Well, Fiona, I see our time is almost out, and we haven't really covered everything we wanted to, but we have covered the most important aspect of this conversation when it comes to the aspect of common reporting standards. But someone is asking me, and if you may, this will be a question that I want you to quickly just go through. This is Stars who is asking, so what happens in a situation where I have a tax debt that a former employer did not remit? Who should KRA look up for? Me or the former employer? Fiona.
So, this tax debt is from how many years ago? If it is from within the active 5 year period of audit, because the active period of audit, unless it's a criminal investigation, is normally 5 years. So,
Yeah.
like right now, we are in 2026.
Yeah.
The active year is 2025 because we haven't yet closed that year. So the active 5 year gap of audit is between 2020 and 2024,
Yeah.
meaning that the taxman can look into your employment records up to the year 2020, but not 2019, going backwards. So if there is an error that is landing within the 5 year active period of tax audit, then was there a lapse in your filing? Did you forget to file your returns? Did you file late and therefore not confirm? Or is it a system reconciliation error? Because sometimes there's something called a debt reconciliation
Yeah.
with taxes that normally needs to be done. When employers are remitting the taxes, they remit in bulk the taxes of every employee. So they will deduct all of you, put it in a bulk or a pool figure, and remit it all at once. So when it lands on the other side of KRA, the system may experience a glitch or maybe an overhaul,
Yeah.
whereby not the exact figures are going into everyone's account. And that has happened several times before. And if that is the case, then all you need to do is have records of your pay slips and your P9 form, and go to your tax officer and have them do a debt reconciliation to confirm that on our side there was a mishap, or a debt, not a misaligned debt
Yeah.
that was captured.
Yeah.
So on your side, with the records that you have, they can now do the debt reconciliation. But if it's beyond the 5 year point, then it needs to be investigated. Who was negligent there? Did you not file your returns on time? Were you not keen as you were filing your returns? Because filing returns is taken to be such a casual thing. Yet when you file the wrong returns, you have absolved your employer. If your employer did not remit and you can prove that you are deducted by your bank statements, yet the employer did not remit, then the one who's to blame is the employer. But if, on the other hand, you are the one who filed wrongly, you have absolved your employer.
All right. Now you know, if you were having some undeclared taxes for 10 plus years ago, kesi yako inaweza kuwa ngumu. You know, actually I have had such a situation whereby a former employer, I think close to 15, 20 years plus ago, didn't never remitted my tax declarations to the, to the taxman, and that includes even the NHIF then. So one day I walked to this office and I'm trying to find my records, non existent. I tried to find if my taxes were paid, nothing. But probably it's because HR was taking care of everything. So, what would be your final advice to any Kenyan taxpayer? Be it you're earning money or not, but uko na pin. Fiona.
Okay, my final advice to Kenyan taxpayers, whether they are in the country or not, is that when it comes to taxes, prevention is better than cure. Always keep proper records, especially when you're in business. It is much cheaper to pay taxes than it is to follow up when you have an ongoing tax case at
Yeah.
KRA. It is much cheaper to have kept proper records and paid something as taxes that is captured in the system. If you're an employee, it is very important to also file your returns and confirm that the amount that is declared in the system, in the KRA system, and right now there's the pay as you earn auto-populated system when you're filing for your annual returns as an employee. So whatever KRA are saying, we received this, you should confirm from your P9 and from your payslips, is this what even me I received? Is this what I was deducted? And if there's a variance, then you should always take it up with your tax manager. Every single Kenyan citizen has a tax manager at KRA that handles your particular tax issues specifically. And these tax managers are normally kept on rotation. So the one you find this year may not be the one that you find next year. So that's why it's good that when you notice something, you tackle it, you finish it, you lay it to rest. So taxes are very important. They can take away your sleep, but they can also give you good sleep if you have done the necessary to ensure that you are aligned on your taxes.
All right, you guys need to align yourselves before it's too late, because today you've received free advice. But in case you want to reach out to Fiona, yana deal na pesa. Fiona, how can people who are interested in getting your services, if you're offering such, get in touch with you?
All right. So I offer one-on-one services, consulting services. I also offer outsourced accounting services. And if you want to reach out to me, maybe you have a problem with your taxes, there's something that you want to understand, there's an investment you have that you need to decompress and break down, then you can reach me either on my number, it's on WhatsApp as well. That's 0117 333 818. That's my Kenyan WhatsApp number. Email, that's you can reach me on my email, fionawitaba1@gmail.com. And you can also DM me on my platforms. I am on TikTok as CPA Fiona Witaba. I am also on LinkedIn as CPA Fiona Witaba. And soon I'll be launching to these other platforms as well. So you can reach me online or offline. I'll be happy to assist you if you're stuck.
All right, ladies and gentlemen, I cannot understate what Fiona said. It will be a disservice for me starting repeating what she said, because if you have questions, you know how to reach her. And Fiona is actually very reachable and available. She's doing an amazing job pale TikTok. So I'm thinking, sa ile serikali na watu wa katiba watapitisha hiyo kitu, atafungiwa, tutamfungulia mlango hapa Court FM. Hata TikTok ikiwa blocked haina shida. We can always schedule her so that you guys can have access to this amazing Kenyan brain. And I'm getting a lot of feedback, Fiona, but because of time, we can always share this later on. I must say it has been amazing. Thank you, all of you who have been watching and listening in. Wycliffe, I see you on the chat. Miss Joker, we have Susie Love, Didi, we also Nema, Marco, Nelly, among others who are in. I can't mention all the names, otherwise nitakani kama nimefungua ile radio ambaye ilikuwa inafungua show ya Kakamega imepamba moto. Now, good night ladies and gentlemen, and Fiona, tutakuonana tena siku nyingine ama sasa ndio mara ya mwisho?
Miti ndio haikutani.
Ushasema basi. Nashukuru sana, and it has been amazing hosting Fiona. Until next time, Fiona, have yourself a great evening, na tuendelee kulipa ushuru, tusizidi kujitegemea kama wananchi wa Kenya. Ladies and gentlemen, that has been the Social Room with Fiona Witaba. Right now, I want to cross over to the rest of the program. So if you're watching us and you love to continue listening in, don't worry, because we are about to get into what we call the ladies' night. It is Wednesday, and you know, as your captain, it's my time to take care of you. So I'll be doing that. But for now, did you know I've got money more than your father? Rema coming up next.